Hi, I'm Sandy Taylor, and I have an urgent story to tell about the crisis that our country is facing regarding income tax law and the urgent need not to just modify it, but to change it inside and out. The following is my story about a Cupertino, California housewife, me, who learned the secrets of the wealthy elite who know how to earn income and pay no taxes. Today, the disclosure of tax records by our presidential candidates brings our attention to this travesty. As a family entering the job market in 1972, my husband and I jumped from struggling college students to mainstream consumers when we bought our first home. We had 2 preschoolers, and I was not employed outside the home, but completed my college education during those years. My husband entered private practice at a medium-sized medical clinic in a California metropolitan area after serving a 3-year assignment with the Army during the height of the Vietnam War. Property values in California were just beginning to rise, and I knew that real estate investment would afford significant income tax shelter as our income increased over the next few years. At the end of the first year of family practice, we were in the highest tier of income taxes with no significant deductions. We paid $45,000 in taxes, nearly 50% of our earned income, and that was at the maximum tax bracket. I asked my husband to allow me 1 year of managing our finances in order to reduce our taxes to 0, which I knew was possible because people I knew in the higher income levels paid no taxes because of legal deductions and tax shelters. During my years of employment, I had paid appropriate taxes with few deductions and exemptions, which I assumed only applied to lower income levels. After purchasing a single-family income property and a condominium rental, by the second year we paid $22,000 in income taxes. With expenses exceeding rental income, the net operating loss lowered our overall tax bracket, so we paid a reduction in total taxes. After 3 years, we sold the single-family property and invested in a 4-plex, a 4-unit apartment building. That year, our tax bill went to 0. I had accomplished my goal, although it took 3 years instead of 1. At that point, our economic saga became complex. Continuing to invest in residential income property, we eventually bought larger complexes. By no means were we high financiers. We were upper middle class professionals who were taking advantage of our national income tax policy. We lived in an area that had rent control, and we never gouged our tenants. At that time, the tax advantage that applied to real estate investment was the policy that applied to long-term capital gains, which meant that if we sold a rental property and cashed out, after holding the property for a minimum of 18 months, we paid ordinary income tax on only half of the profit. That particular advantage encouraged investors to support the housing market, which was booming in most areas of the country in the early 1980s. But the Tax Reform Act of 1986, signed by President Reagan, repealed the tax advantage of capital gains and returned the taxable gain from 50% to 100% of realized profit. During 1985, I had purchased an incompleted condominium complex of 7 units. My goal was to finish building all of the units and then sell them individually. In anticipation of sweeping changes in income tax law, many potential investors were skittish about remaining in the housing market. After a market push to sell the units individually, only one offer came in. I signed the sales contract and continued to market the remaining units. Shortly thereafter, an investor made an offer to purchase the entire complex, but it had to close by the end of the year because of the pending tax reform laws. But since one of the units was already in contract, I could not accept his offer. According to the investor, he was only interested in properties that had a considerable positive cash flow, because the motive to shelter income through real estate investment no longer applied because of the tax change in the long-term capital gains tax. The real estate bubble burst with that tax reform package, and we small investors have never recovered. The domino effect hit me as well as other small investors, and within a few years I had lost all my real estate properties and was nearly bankrupt. I was a small individual investor and therefore had not protected my assets through incorporation. My error. On top of that, divorce reduced my credit capabilities and I was no longer able to qualify for loans. Other more experienced investors moved from the housing market to the stock market, artificially inflating the stock market, which now seems to be on the brink of collapse. My question is this: wouldn't a reinstatement of the capital gains tax reduction aid both the housing market as well as the general economic status of our country? I've heard that so goes the housing market, so goes the economy. With the current failing of major household lenders, housing lenders, mortgage brokers, and the possible bailout by the federal government of such banks and mortgage companies, and we the people financing those bailouts through our tax dollars, every plausible solution must be considered. And this is my suggestion. Income tax. As I became more experienced in investments and more savvy in the economics of capitalism, I realized how unfair our income tax structure is. If I, as an inexperienced young woman, figured out how to pay no taxes, I can just imagine that sophisticated investors can shelter all of their income too. Is it fair to the average citizen that the system allows this inequitable assessment of taxable income? The present graduated income tax program does not work, and it puts a heavy burden on lower income wage earners who are allowed few deductions. I believe that a tax from 1 to 10% fixed rate based on gross income without any allowable tax deductions other than certain exemptions such as qualified dependents would increase the income tax pool substantially. It will simplify the system and reduce the cost of printing complex tax forms, the cost of tax preparation. And after all, 10% of a million is better than 28% of nothing. And now, as a retired single person, in order to sustain a minimal standard of living, I supplemented my $800 a month Social Security requirement income by working 2 minimum wage jobs. That year, I paid 10% tax on my adjusted taxable income. That same year, Mitt Romney disclosed his income tax records, and he proudly said he paid 10% taxes on his adjusted gross income, which was the same tax rate that I paid. My total gross income was under $20,000, which is well below the poverty level. Is that equitable? Retired people who work have an earned income tax credit, but only if you're under a certain age. So I had no tax benefit other than the standard deduction for a single person not head of household with no dependents. To equalize tax rates, the gross income level that pays zero tax must be raised. Again, I should not have paid taxes on income below the poverty level, and Mitt Romney should have paid more tax dollars. Without tax shelters, he could have paid 10% on his gross income and still had a very comfortable, spendable income. Please share this video and demand tax reform. Thank you for listening.